Hello and welcome to BQ Prime. I'm Hiral Daria. Joining us on the show today is Nrupesh Shah, ED at Symphony, to discuss Q4 earnings and what's in store from here on. Welcome to the show, Nrupesh, and a very good morning.
Thanks. Pleasure for hosting me.
Always a pleasure. Nrupesh, my first question coming to you is domestic business, which is almost around, say, 70% of our, revenues. That has been pretty much in line with what the street was estimating. However, there has been sustained weakness in the rest of the world portfolio, and that is something which has pressured our Q4 numbers this time around. Has the quarter firstly met your internal expectations from here on?
No, your observation is absolutely correct. So, as far as domestic business, that is India sales is concerned, whether it was for March quarter or year as a whole, it has been absolutely in line with our expectation and our budget. So domestic sales for the quarter YOY has grown by about 23% and year as a whole about 24%. And this is despite occasional rains in month of March. Secondly, even in terms of the gross profit margin percentage as well as EBITDA margin percentage in line with our earlier estimate, that has also shown some improvement on account of the price hike, new launch of models, as well as softening of the input costs. Now, coming to the second part that is related to overseas subsidiaries, particularly Climate Technology Australia and US have been a big disappointment. They have not lived up to the expectation. Again, as conveyed earlier, this was expected, but expectation was not so low. So, in nutshell, about United States Home Depot and other sales on account of local economic condition and downturn, they have not only destocked, but they have substantially reduced the order size, which is less than half of previous year. And that's what reflected in the current quarter performance as well as console performance year as a whole. Thirdly, during the same period in FY22, we had registered sales to subsidiaries in excess of 60-65 crore. So that was completely lost. To that extent, whatever margin we keep in Symphony standalone India, that also we lost, and coupled with Climate Technology Australia and US disappointing performance. However, we strongly believe that and are of the view that based on several cycles we have passed in the past, this should be one of the event, because irrespective of the economic condition, the offtake of air cooler, the consumer retail sales is correlated with the weather, with the climate, not much to do with the rising interest rate or somewhat recession or economic condition. So we believe that by summer end, which will be sometime in August, September, October in United States and January, February in Australia, they may be out of stock, but at that stage, nothing can be done. And hence, viability in the medium to long term very much remains intact.
So, Nrupesh, overall, one is the delayed onset of summer. That has led to actually higher channel inventory as well. So what is the number of inventory days that we are staring at versus normalized?
So if we talk the channel inventory as of now, or if we talk about the channel inventory as on 31st March, it is in line with what it should be at this point of time. So there is nothing abnormal or exceptional. On the contrary, in some parts of the eastern India and southeast part of the country, where even in April also, there were many hot days. In fact, in some of the models, it was out of stock. As far as the rest of the country is concerned, we have almost entire May and June have yet to pass. And and normally in central India and northern India, otherwise also historically, summer sets in end April, early May. So I don't think there is any cause of concern in that respect.
Right. So from here on, if you have to look at the remainder of FY24, what's the kind of growth that we are looking at? Because we already spoke about that we global cues is not something which will impact this kind of a business. From an execution perspective, where are the challenges coming in, taking specifically the rest of the world business into consideration?
As first and foremost, in the rest of the world, we are focusing in a big way in terms of strategizing and certain major action items in Australia domestic business as well as United States domestic business. Coming to Australia domestic business, we have already internally announced and initiated certain measures whereby its cost of doing the business should be down in FY 23-24 itself, anything in the range of 15 to 20 crore without impacting the top line. And next year, that is FY 24-25, once its full impact is realized, cost of doing the business should be down by 20 to 25 crore. So that is first and foremost. Secondly, currently the most of the products what we sell in Australia, they are ducted products. We are shifting as per the market trend from ducted products to movable and mobile air cooler, heater, AC, etc., which is the market aspiration. They are box in, box out products. Margin is much better, and that is about the business strategy. Thirdly, in line with Symphony philosophy or completely asset light, which we had initiated when we acquired, but because of COVID, we couldn't implement fully. By current year in end itself, climate technology Australia will be completely asset light. What I mean by that, those mobile air coolers will be manufactured and built from Symphony India, and the rest of the products, Climate Technology Australia will procure from China, which we have already lined up. As far as United States is concerned, as I said, we believe that US viability very much remains. It should be one of the event. But on top of it, as of now, more than about 90% sales is through Home Depot. Now we have tied up with Amazon US also, and on Amazon e-commerce also, Symphony range of air coolers, essentially under Bonaire brand, are being sold and available. We have already launched D2C in United States and so in Australia. And D2C is much beyond having just a website. We are also in the negotiation with some other large format stores, including Lowe's, to further diversify the business in United States.
Right. So, Nrupesh, the key concern when we're talking to analysts also what they raise is that with the extension of our business to rest of the world market, that's actually added more risk than thoughts of de-risking the business. How would you want to respond to that?
No, as of now, the way in which our performances come out in 22-23, we can't disagree more. So they are absolutely right. As of now, that's what the reality. However, as we said, let our strategies be implemented, which will take 1 to 2 years, and we are reasonably confident. We see the potential. We will turn it around as we have earlier done with IMCO Mexico or many years before with Symphony India. And by the way, with GSK China, which is not much being talked about, last year itself, that is in year 22-23, we reduced the cost of doing the business by 35%. And hence, on a standalone business, despite it turnover came down due to the local COVID condition and other restrictions, at a cash level, GSK broke even, while in earlier year, its cash loss was 8 crore. So, we should do that, but absolutely, as of now, it has not lived up to our own expectation, and so for the investors when it comes to the subsidiary and
Right. So overall, from here on, very lastly, I was just reading a report which said that the AC sales have dipped 15% in the month of April as the temperatures have fallen. However, there is a recovery that is expected in May as well. Now, taking that into consideration for air coolers, how have you seen the trend between April and May?
So, at a company level, our sales to trade channel, whether modern trade channel or traditional trade channel, we haven't seen that drastic reduction. While there has been somewhat reduction, but current month, maybe in next 2 to 3 days, as per all the weather forecast, it's likely to be a decent summer, and we expect that, and all the market feedback is we should make it up, and this has happened in the past also. So we are still reasonably optimistic as far as the quarter as a whole is concerned.
Right. And overall, FY24, what's the kind of growth that we can look at from a top line and bottom line perspective, and specifically from the margin side as well? Because the margins have actually slipped to single digit from a double digit that we already had.
So, as far as year as a whole estimate is concerned, we don't give precise numbers or guidance. We normally give it on a CAGR basis for medium to long term, so that very much remains intact in line with what we have guided. As far as very, very specifics are concerned, let June 23 quarter be over, we will have a much better visibility. This is as far as the top line is concerned. Coming to the profitability part, let's view it and review it in two parts. One is on a Symphony standalone domestic business, and second is for the subsidiaries and hence console. So as far as standalone is concerned, it can be seen even in 22-23 YOY gross profit margin percentage and EBITDA margin percentage. Both we have succeeded in increasing it, despite raw material costs actually in 22-23 is higher than pre-COVID year, of course lower than previous year. So that is on account of launch of new models, on account of somewhat value engineering, price increase, and partly softening of the raw material costs. So our clear-cut trajectory is to further improve the EBITDA margin percentage, and finally our aspiration is and game plan is to take it to close to what it was historical high in terms of the standalone EBITDA percentage. Coming to subsidiaries, I outlined earlier some of the strategies what we are taking. We believe that should reasonably pay off in 23-24, and we believe that climate technology should perform and deliver something in line with what it had delivered in 21-22. Just to remind, in 21-22, climate technology had incurred the profit at a PAT level about 11 crore. And on top of it, there was a decent profit kept by Symphony India on sale to climate technology. So both put together, it was quite decent. So we expect that it should be back to that level due to various strategies.
Right. So I think a lot of things that we should be watching out for as well from here on. Thank you, Nrupesh, for joining us on the show and giving us this candid view in terms of what could be on the store, what is the strategy that the company is adopting from here on as well. Thank you. Stay safe and speak to you soon again.
Thank you, and thanks for good questions and detailed analysis.
Always a